Okay, well, Rana Gupta is now joining us. He's Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, good to have you with us here. Thank you very much for your time. The people have kind of complained at the margin for years now about the uncontrolled, the unlimited printing which the US does, money printing. But, well, they can do that because they've got the US dollar. But the extent of it, the scale of it, of course, is unprecedented now. Yesterday, for example, the 30-year bond auction in the US, I mean, absolutely abysmal. And that sparking a risk-off for equities, Rana, that is a new thing. Your thoughts broadly, if you saw what happened, and where does it go from here?
Good morning. You raise a very important point. Throughout the many years, markets focused on money printing and the rates. Now, the US dollar printing also what is enabled the US government to do to run higher fiscal deficits. As the bond yields move up, how high the deficit the US government can run can increasingly come under question, and some fiscal consolidation may happen there. If you look at the last year, despite the high rates, the risk assets by and large did all right, did okay. Economy showed resilience. One of the reasons was expansion of US fiscal deficit, the fiscal impulse, fiscal spend in US. If that gets challenged by the bond market, and if that necessitates some fiscal consolidation, one has to be careful about projecting this kind of economic resilience going out to CY 2024, particularly in the developed world.
Okay. Good morning to you, Rana. So, given that the uncertainties around the US bond market continue and this whole higher for longer debate is still raging, what is the stance you're taking on an emerging market like India?
Well, I think for the emerging markets, it's very important to have a few things right. For example, the fiscal in order, the current account in order, and the country should not have too much of US dollar external debt, because all those things are a bit uncertain. Neither the country should have too much of external reliance for its growth. Fortunately for India, ticks most of these boxes better than other emerging markets. The country's the fiscal resilience is quite good. Current account has improved. External vulnerabilities are quite low. So among the emerging market pack, I think India looks quite good in relative terms.
Hi, Rana. Good morning. Nigel on this side. Rana, but I wanted to ask you, globally, are we in for a period of maybe some consolidation, maybe a pullback in equities? Because you have yields that are offering such attractive returns and risk-free. Do you think we could go through, say, a bit of a phase, say, a 3-6 month period?
Oh, that's quite possible. In fact, in the past also when we interacted, we pointed out that because of this yields movement, the equity markets are volatile. But if you take a step back, it's all in a range. I mean, I think equity markets, Nifty specifically, spent about 1.5 years between 16,500 to 18,500. Now it can spend few more quarters between 18,500 to 20,500 or thereabouts. So I think depending on the global situation, I think the markets will remain range bound for at least next about 2 quarters, and then let's see what happens next. But within that range bound market, I think you will get pockets of outperformance.
Okay, Rana, just talk about elections. I think most people are of the view that we will have continuity. I'm talking about state and, of course, general elections as well. But it's still a hot topic. I mean, at least I found the first thing people want to ask or discuss is that. What's your view, Rana, on elections, both state and general elections? Yesterday, we had Ramdev Agarwal with us on the show, and he was saying that we could, but he was talking about general elections. He was saying that like what we saw in 2014, when the rally started sometime in late 2013, you could basically get a rally into general elections. Is it possible, or what's your sense? What's your broad take?
So I think on the state elections, I think it's very established fact by now, backed by data and a lot of research, that people vote differently in state and central elections. So state elections, market might react, but we won't read much into that. The real deal is, of course, the central election, where the base case is based on what we see, the opinion polls and all the data has to be continuity. Now, whether the market anticipates and makes a run before that or not, it's a difficult call to take because there are several other factors, including US bond yields and the level of market growth and so on and so forth. But what we can say, so overall market difficult to comment, but what I said to answer to the last question also, although the market overall may remain range bound because markets also has so much external facing sector, because of the domestic policy, what happened in last 10 years, and should this government come back, they will get more momentum. I think those sectors can continue to do well.
All right, Rana, we'll keep that in mind. Thank you very much for joining us this morning. Wish you season's greetings. Hope you have a great festive season, and we look forward to our next conversation.